Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Hello everyone, welcome to an all-new episode of the Smart Property Investment Show. Unfortunately, I am not Phil Tarrant. I'm stepping into his shoes for today. I'm Grace Ormsby. I'm one of the journalists behind SBI. And September is usually a peak selling and buying season, but by all accounts, this year will be slightly different. Anecdotally, we are hearing of plenty of investors who have taken the time during COVID-19 to make very strategic purchases. So we're joined today via Zoom by someone who has done just that, Aishwarya Kesarwani. Welcome to the show.
Hi, Grace.
I know that you did purchase a property in April. Congratulations. That must have been very exciting for you.
Yeah, thanks a lot. Yeah, definitely. It was quite, nerve-wracking to buy a property during the midst of the pandemic in April, but so far I'm quite happy with that.
For sure. Can you talk us a little bit about your property investment journey to that point? Was it your first time buying? Had you purchased previously? What sort of led up to that point in time?
Yep. So I've been actually looking for a property since mid last year. And I had been, keeping an eye on the suburbs that, I wanted to purchase in. So I got my loan approval process starting from December, and I started going to auctions and, see where the property market is at. So yeah, roughly for about a year, I had been monitoring the property market closely, and I noticed that leading up to April and a couple of weeks out, mid-April, the values were declining quite a bit, especially during the auction period. So that's when I wanted to, step in and take the opportunity and buy at that point.
And I don't think anyone could have expected prices to do what they did, in March and April, considering the pandemic. Was that a pleasant surprise for you? Were you willing to buy regardless of what the market was doing?
So I had a budget in mind, and at that point, my budget was around $650, which is, quite good for a first home buyer, so you can take advantage of the grants. But when the pandemic actually came, I was able to actually afford in suburbs where I wasn't able to afford, before that. So it was a pleasant surprise.
That's awesome. Can you spill a little bit about what your property purchase actually was?
Yeah. So as I mentioned earlier, so the first week of April, I went to an auction, which was an online auction, and the house was in Granville, just within 5 kilometers from the Parramatta CBD. The property was a deceased estate, and no one had lived in there for about 4 years. So it was in very, rundown condition, but that's something I was looking for. Knowing the Granville market and the Parramatta market, I knew that, if I could renovate this, the price would be around 900. So I was looking for, a fixer upper, as you say. So yeah, that's my purchase.
And I think I've got this right here that you have actually already done that renovation. How was that?
Yeah, so the renovation took about 3 months. There was quite a lot of work to be done. As I said, no one had lived there for 4 or 5 years. So we had to do everything from scratch, put toilets in, new kitchen, and the property is now actually on the market with auction within 3 weeks.
When you were at that auction initially, was there a lot of competition for it, or do you think a lot of buyers were scared away by what was going on?
So what I noticed mid-March was every Saturday when I used to go to the auction, the number of people competing for that property was just declining. And, at the start of March, I actually wasn't able to, bid quite a bit in the auction because of so much competition. And in the start of April, I noticed that the competition had basically halved. And even for the property that I purchased was an online auction. So that probably scared away quite a lot of the buyers. And I think, the auction being online, a lot of the buyers weren't really aware of, the auction being online compared to on site. So even then, my auction actually went for 2 hours.
Wow.
Being online. Yeah. So It started at 500,000 and went up to 550. And then after that, it was basically between me and the other bidder. And it just went with $500 increments. Yeah, so the auction started at 8 p.m. and finished at 10. So we got the money's worth out of the auctioneer. So.
For sure. Oh my goodness.
Yeah,
that would have been quite a process. I mean, you obviously had your heart set on it.
Yeah. Definitely.
What would have happened if you didn't get that property?
So if I didn't get it, I was, probably looking at other suburbs like Blacktown further west, because it's quite hard to get it in that price range in Granville. Yeah, I was quite sure, and I was willing to go up to 650,000, and I only paid 632. So yeah.
That sounds amazing. We're going to take a quick break, Ash, but we'll be back very shortly.
Whether you're an avid property investor or about to buy your first property, why do it alone when you could partner with Australia's best buyer's agent? Director of Pure Property Investment, Property Investment Professionals of Australia board member and REB Buyer's Agent of the Year, Paul Glossop, can take your portfolio to the next level. Get in touch today to discuss your investment goals. Get one-on-one insight from Paul Glossop. And for the first 100 people, this service is completely free. Head to purepropertyinvestment.com today to schedule your consult with Paul Glossop directly.
Welcome back to this episode of the Smart Property Investment Show, where we're talking with a first-time investor who's just got himself into the Sydney property market at a very, I think I'm going to say a crucial time. With COVID-19, a lot of people have been scared away from the market, but here we have a success story. So Ash, just before the break, you were telling us that you purchased your property for $632,000 and you have done it all up and it's back on the market. What is the reserve starting price going for?
Yep. So we had some feedback from a couple of agents before we went with that particular agency, and we're getting estimates from 950 to close to $1 million.
Wow.
So I would probably set the reserve at a minimum 900 and then see how it goes on the day.
Yeah. And do you think there is some heat coming back into that market? What was the strategy behind doing a renovation and then putting the property straight back onto that market?
Yeah, so that links back to my long-term goal in property investing. Being 24, my aim right now is to renovate 4 to 5 properties and flip them, and obviously use that capital to buy, long-term assets, and probably 4 to 5 in my portfolio that will pay off in the long term. So that is my strategy so far, and that's why I decided to renovate and then put it back on the market. And it helps that, so I'm a civil engineer by profession, and it obviously helped me that, during my renovation process as well.
For sure. So did you do a lot of the work yourself then?
Yeah. So I did probably 30% of the work myself, and I managed the project as well. So I was able to save quite a little bit of cost, and I was able to source material as well, quite cheaper as well. So, yeah.
How much did you pay for that renovation?
So all up, I paid around $85,000 for the renovation. Yeah.
So that brings you up. So what, from 632,000 up just over 700,000?
Yeah, just over 85 includes, my holding costs, monthly repayments, water, electricity, and all of that. Yeah, it doesn't include, it doesn't take on my time and effort that you put in. So.
For sure. And you're 24.
Yeah.
So you're doing pretty well. This has been a pretty successful 2020 for you.
Yeah, it has been. I've been saving up for about 3 years for this, to get into the property market, because I knew that the deposit 10% would be around 65. So I had to save up about 130,000 so I can get into the property market. Yeah.
Definitely. It sounds like you're in it for the long haul though, as opposed to just the quick win, even though it seems like a very quick gain.
Yeah, I think it also gets very addictive when you do it once. You want to do better again and not make the same mistake, because obviously doing it for the first time, I know that I made some mistake, maybe I could save another 10 grand in the next renovation or house flip that I do. So yeah, I would definitely do it for the long term. Yeah.
So then you're obviously focusing on those house flips as opposed to holding on to properties and, seeing the capital gains more long term, or even the rental returns. What's been the strategy behind that, and why are you taking that approach?
Yeah, I thought that this is just my understanding that I could maybe fast track my, property portfolio by getting these short-term capital gains. So I could reinvest it and use it as deposit for, long-term properties. Maybe in 5 years' time, I can start, getting properties for rent and not for flipping. So at least in 5 years' time, I'll have enough capital to be able to do that instead of buying one property now and then another one in 3 years. That's just my thinking for now. Yeah.
For sure. And I guess on that note, you do have age on your side. Being young, you can be a little bit more quick, I guess, and a little bit more high risk. Some would call it a bit more high risk.
Yeah, definitely. There's a lot of, input required if you're doing, renovation. It takes quite a lot of your time from on top of my normal full-time job. So I think it definitely helps doing that now instead of doing that when you're 45 or 50. So as I said, my strategy is to generate capital now from flipping houses and then reinvest it back in 5 years' time as long-term holds of, So by the time I'm 50, hopefully those properties can pay off itself and I'll have, enough passive income to retire. That's the long plan. Yeah.
Ash, it makes complete sense to me. We're going to take another quick break there, but straight after that, I want to jump into what you mentioned a little bit earlier about mistakes. So I think that'll be a great place to take us to start again.
Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
Welcome back to this episode of the Smart Property Investment Show. We're talking to a 24-year-old investor who has just made a huge purchase, done a whole renovation, and is about to see the benefits of that. So, Ash, it is a big deal that you've made this. You're likely looking at a $250,000, gain on your first investment property.
Yep.
And not many people, I think, can say that. But there's obviously going to be trials and tribulations along the way. And you have mentioned that you did make some mistakes. If you don't mind me asking, what were they?
Yep. So the mistakes, not really about buying the wrong property or any of that. I think from what I've been monitoring so far, I made the right decision and I bought the right property.
Definitely.
The mistakes have been the renovation in terms of, picking the right person to do the job. There's been times where I picked a certain tradie and he didn't deliver on the promise, or I didn't have, inclusions in writing, or I didn't have a contract. So that's where it probably hurt me 5 to 10,000, which I could have probably saved in the future. And that, delay of trades on site also affects, your holding time. And the longer the holding time for the period, then you end up paying more repayment. So I could have probably saved another 3 weeks if I was able to accelerate my project by getting the right, workers on site and the right trades people. And same goes for material. Now, having done the property renovation once, I know where to source the material from. I've already compared 4 to 5 different suppliers for every single aspect of the house. I've got 4 to 5 different suppliers for tiles and 4 to 5 different, tradesmen for carpentry. So I can, I've compared the price. I've already narrowed it down. So for my next project, I know where to source the material from and who to actually use on site who will be trustworthy.
It's a great position to find yourself in, I think. And none of those mistakes seem like, in the scheme of things, that they're absolutely huge issues, but they would be when you're going day to day on that sort of project, I imagine.
Yeah, definitely. It does cause you a little bit of stress when you think that some work is going to happen, and you turn up to site and it's not done. And then there's also deadlines. You have to finish the project as soon as possible. So yeah, that will definitely help me in my next project when I've already narrowed it down, how to procure, goods and services.
And the pandemic, what was the effect on that going through the whole process? Did you find it an issue? Are you sort of looking forward to the next project maybe not having as much of an issue because the pandemic hopefully won't be as much of a thing? I guess, What's been the overall effect of that?
So in terms of the whole buying and renovation process, the pandemic obviously affected the auction because at that time, New South Wales government didn't allow on-site auctions. So as I said, it was all online. And in terms of doing the renovation work, it was actually cheaper because the labor is cheaper now, considering the high unemployment rate. So, I noticed that whenever you put on an ad, to do something for a particular trade, you always got 5 or 6 inquiries, and the rates were quite reasonable as well. So because of the high unemployment rate, people wanting to get some work. But looking at the future, I think it'll be a little bit difficult than this one because, as you mentioned, the effect of pandemic won't be as much as March and April. That means the buy price will be, comparatively higher than what I was able to achieve from April.
Yeah, I guess it's just something no one would have expected coming through to this year. So props to you for going ahead and pushing through and still getting such a great result, because a lot of people would find something like that too scary to start.
Yeah, thanks. So definitely it was scary, but I had a principle that I'll look at the property from the base value, which is just land value. So when I was buying this property for 632, I saw that just the land value is more than 600,000. So you're basically getting the house for free. And that, if you think about it from that perspective, then it doesn't look that scary. Because, in the long term, Sydney market has always appreciated. If you look at last 10 years, 20 years. So I knew that worst comes to worst, I can always just renovate it and rent it out and be, positive cash flow. That's what made it easier for me to purchase.
It's almost like a built-in safety net, really.
Yeah, definitely. That's why I prefer a house with a land instead of buying something like a unit where the price is very much dependent on the developer in that area. So I felt a lot more comfortable buying in an established suburb of Granville, where I know that there wouldn't be a lot of stock in the market, because even if you check now, there isn't a lot of stock in the market. So that really, pushes the price up, or at least keeps it stagnant for some time.
And Parramatta is only going to go onwards and upwards from here, isn't it?
Yeah, I saw some news the other day that there was more, skyscrapers that got the DA approval in the Parramatta CBD. So, Granville being close to it should have some sort of positive impact on the median suburb price. Yeah,
definitely. And Ash, I know you are an avid fan of the Smart Property Investment Show. What were the kinds of things that you were using it for, I guess, to gain insight into the market, into an investment journey and into research and things like that before you actually took the plunge yourself?
Yeah, so there's quite a lot of different learning from so every episode for me teaches me something else, and hearing about different stories from different investors who come onto the show and speak to Phil, it makes me feel that it can be done, and having multiple properties in your portfolio is quite normal. So I learned a lot about researching about a particular suburb, looking at the demographics, looking at the vacancy rates in that area and how it's been performing in the last 5 years, using, tools, researching tools such as Core Logic as well really helped me to, narrow down 4 or 5 suburbs where I would invest in.
That's awesome to hear. And I hope in turn that this inspires some of our listeners out there to take the plunge themselves. But as well, what's coming up for you next then? How do you go up from potentially making $250,000 to $300,000 on your first property within 6 months of making the purchase to begin with?
Yeah. So first of all, my auction is on the 26th of September. Hopefully from there, once I receive funds, I plan to purchase closer to the city. I've been, doing some research around Mascot area close to Kingsford. So again, I plan to purchase somewhere around 950 or $1 million mark, just a fixer upper area, because I see that they have quite good value once they're renovated. Once you renovate somewhere around the airport area, you can fetch 1.4, 1.3 mils for value add. And the block sizes are quite reasonable as well, 350, 400 square meters, close to CBD. So that's where I'm looking at.
Is that almost tactical as well, considering travel has pretty much ground to a halt? It's probably going to be a while before we do start seeing people go back overseas, and that's generally where a lot of that demand for that area would have come from. Has that factored into your decision making at all?
Yeah, definitely. So I've seen that in the last 3 to 4 months, the median price for suburb airport has actually declined. So that would be a good opportunity for me to purchase somewhere closer to the city and possibly add value. So I target disease estate or something like that.
Sounds like a really solid plan. When you do fix these places up, what are the kinds of things that you think are important to get that price value up and to attract people into the home?
So from this house, I would say that I just try and make the house more modern, even though it's, the house that I purchased in Granville is 120 years old, right? So it's quite hard, but
it would have its own problems, wouldn't it?
Yeah, like basic things are like, just leaking water. So that you wouldn't have in the modern house. So obviously we'll try and renovate everything and make the house fresh and have a good street appeal. So, landscape front yard, I think goes a long way. And obviously the front yard is the first impression for anyone driving past the property or walking past it. Yeah, so landscaping and just having LED lights in the house, it just brightens the whole house up. And what I found that the older houses have high ceilings. So if you have good, LED lights, ceiling fan, it just, really makes a room very spacious.
It sounds awesome, and I'm very impressed listening to you, and it's inspired me as well. With the next property, do you think, how long until that will be done as well? And where do you see yourself, I guess, in 5 years?
So as I said, auction by September, hopefully receive funds by October. So I'll probably be looking to purchase somewhere around November, December. That obviously depends on the whole economic climate because,
for sure,
things are changing every day. We don't know where it's going to go. But I mentioned earlier that in the next 5 years, I just want to, just buy and sell, renovate properties, generate capital from there. And then after 5 years, that's when I'll start, buying properties to hold and, for rent. That is my 5-year plan for now. Yeah. So if I could do one property a year, that would be more than sufficient for me. Yeah.
That sounds great. And I guess has a little bit of downtime because it would be full on.
Yeah, definitely. Yeah. With my full-time work as well, it's quite, you're always doing something. So it's, you have to sacrifice your weekends and, after work hours and be at the property, all that. So yeah, definitely some downtime helps. Yeah.
But I'm imagining it's all very worth it.
Yeah. That's what I kept reminding myself when I was there at 9 p.m. that, it's going to be worth it in 3 months. And let's hope so. Yeah.
Ash, best of luck for that auction. I will be keeping an eye on the results. And if you want to send us an email, keep us up to date. We'd love to be able to put an update on the site as well. But thank you so much for your time today. It's been great talking to you.
All right. Thanks a lot for having me on the show.
If you enjoyed this show, please leave a review on whatever platform you are using to listen in and be sure to subscribe if you haven't already. And if you do have any questions for the Smart Property Investment team, don't hesitate to reach out either via our social media channels or at editor@smartpropertyinvestment.com.au. Until next time, stay safe and stay well. Goodbye for now.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Whether you're an avid property investor or about to buy your first property, why do it alone when you could partner with Australia's best buyer's agent, Director of Pure Property Investment, Property Investment Professionals of Australia board member and REB Buyer's Agent of the Year, Paul Glossop, can take your portfolio to the next level. Get in touch today to discuss your investment goals. Get one-on-one insight from Paul Glossop. And for the first 100 people, this service is completely free. Head to purepropertyinvestment.com today to schedule your consult with Paul Glossop directly.